Hey folks, it's your boy Brick. Welcome to Crypto Gold Fusion, where digital innovation meets timeless value. If you're into crypto, gold, and market truth bombs, you're in the right place. Let's dive in. Markets are on edge, and Bitcoin is watching closely. The Federal Reserve's next move could either send crypto flying or crashing. In this video, we'll break down what to expect from the Fed, how it affects Bitcoin, Ethereum, and gold, and which levels to watch right now. Let's get straight into the charts and the macro. No fluff. Leader charts to numerology. The Fed decision explained. The Federal Reserve is set to announce its interest rate decision this week. While most analysts expect rates to stay unchanged, the market is pricing in high volatility either way, USD. Higher interest rates typically mean stronger USD, weaker crypto and gold. A dovish tone, however, could spark a risk-on rally, bullish for Bitcoin and altcoins. I say to me and Stolakout, I'm unknown name. As you can see, Bitcoin is currently trading around $105,000 at the time of this recording, and we've just witnessed a powerful V-shaped recovery after a sharp dip below the key demand zone, marked between 100 nulls, $825 and 100,1990, $507. The key levels to watch. This aggressive bounce signals strong demand absorption, potentially a liquidity grab below the lows, followed by heavy buying pressure. The next major resistance stands at $103,938, which price is testing now. If BTC flips this into support, the path opens up toward the next clean targets. $107,998, a minor resistance from previous breakdown. $110,700, major liquidity and supply zone. The key is holding above the neckline of this recovery, around 102,800. Lose that, and we risk a retest of the demand zone. At the same time, the macro catalyst of the situation. Don't forget, the Federal Reserve's tone this week is critical. A dovish pause or inflation softening could fuel this upside. Continuation. But hawkish surprises might cap momentum or cause rejection at resistance. Actuals. Right now, momentum favors the bulls. This V-shaped recovery shows strength. If BTC holds above $103,000, I'm expecting a push toward $110,000, possibly before July. If price fakes out below $102,000, $8,000, watch for a potential second bounce off the same demand zone. But that scenario adds risk. Ethereum recovery update. What's next after the V-shaped bounce? As you can see, Ethereum is currently trading around $2,320 after showing a sharp V-shaped recovery from the recent sell-off. It's now holding above the marked demand zone, and bulls are watching closely. The technical breakdown. Looking at the 4-hour chart, we saw Ethereum break down from a tight consolidation range and sweep liquidity into the 120,000 demand zone, which held like a champ. The bounce was strong, printing a V-shaped recovery similar to Bitcoin. ETH is now holding just above the 2296 zone, which is acting as short-term support. The upside targets. If bulls maintain momentum, I'm eyeing two key upside targets. 2487, previous breakdown zone and local supply. 2556, major resistance. Reclaiming this flips structure bullish stuff. A clean break and close above 2487 would confirm strength and potentially trigger a run toward that upper resistance band, the downside risks. On the flip side, if price fails to hold 2296, we could revisit the same demand zone around 2265, 2210. A second bounce from here is possible, but a deeper break would shift short-term bias bearish. The macro catalyst. Don't forget, broader market sentiment is still hinging on the Federal Reserve's interest rate stance. A hawkish tone could weigh on risk assets like ETH, while a dovish outlook or softer inflation could fuel continuation higher. So here's the play. What I expect if Ethereum holds above 2296. Upside continuation looks solid, first to 2487, then possibly to 2556. Gold dumping hard. Is $3,300 the next target? As you can see, gold XAUUSD is currently trading around 3,316 and showing clear signs of bearish momentum. After failing to hold above resistance, prices started a sharp leg down, and things could get worse. The breakdown in motion. Price recently tested the 3,361 supply zone, where it faced heavy rejection. That created a double top pattern on the lower time frames, which has now triggered a breakdown candle to the downside. The current structure. Gold is currently trading below 3,340, and momentum is bearish. The market broke structure and is failing to reclaim the breakout zone. If there's a minor relief bounce, I'm watching the 3,340-3,361 zone for a possible bearish retest. That could provide another short entry opportunity. The downside target. If this bearish continuation holds, price could drop toward the major demand zone between 3,303 and 3,290. That's where we last saw strong buyer interest. The macro factors. Gold is under pressure due to two major macro forces right now. Rising real yields, strengthening the USD and weighing on gold. Hawkish tone from the Fed, limiting safe haven flows. Unless we get a sudden risk-off move or geopolitical flare-up, this downtrend may continue short-term. So here's the play. What I expect unless gold can reclaim 3,361, I'm expecting continuation toward 3,303, possibly deeper. Here's what to watch going into the Fed meeting. As we head into the Fed's upcoming decision, here are the key things to keep your eye on, especially if you're trading or investing in Bitcoin, gold, or major altcoins. Then Powell's language, not just the rate. Markets largely expect the Fed to hold rates steady, but the tone is what matters most. If Powell hints at staying higher for longer due to sticky inflation, it could trigger risk-off sentiment across crypto and gold. Then Bitcoin sensitivity to liquidity. Bitcoin is highly sensitive to liquidity. Any sign of upcoming easing or dovish signals can ignite bullish momentum, but a hawkish Fed might push BTC back below key support levels like $63,000. Then gold's dual role. Gold is in a tricky spot, caught between being a hedge against inflation and a victim of rising yields. If real yields climb and the Fed stays aggressive, gold may pull back, but any geopolitical shock or dovish surprise could cause a breakout. Then 4. Market volatility after the announcement. Remember, the real move often comes after Powell's press conference. Watch the volatility spike in the hours following the announcement, especially across BTC, Ethereum, and XAUUSD Gold. Bottom line, this week isn't just about the number the Fed prints. It's about how the market interprets it. So stay alert, protect your capital, and don't trade blindly into the noise. Volatility is expected to spike around the release time of USD. Fed Chair Powell testifies today's event. Be cautious with open positions and avoid trading blindly during the first minutes of reaction. That wraps up today's Crypto Gold Fusion update. Got a chart request? Drop it in the comments. We always check in. Don't forget to like, subscribe, and tap the bell so you never miss real market insights. And also don't forget to join our Telegram channel, link in the description, for real-time updates, trade ideas, and smart discussions with the community. Thanks for riding with us, and remember, whether it's blockchain or bullion, fusion is the future.